Are you prepared for the potential upheaval in the gold market?
Absolutely. Experts like George Gammon are exploring a revolutionary idea: gold quantitative easing by the Federal Reserve.
And that's just the beginning. With AI-driven summaries, we're bringing you their insights in just minutes.
Join us as we dive into the warnings of a Bloomberg strategist about gold's perilous stance.
And don't miss Dr. Emily Brown's crucial take on the Texas housing market collapse.
Stay tuned. We'll also explore how shifting job market dynamics could turn the narrative on its head.
Today, we're discussing the potential for the Federal Reserve to adopt gold quantitative easing, as analyzed by George Gammon.
Gammon's analysis raises important questions about the future direction of monetary policy and its impact on inflation.
Gammon suggests that a transition to gold could fundamentally alter how the Federal Reserve approaches its monetary policy.
He believes this could provide a more stable framework for currency valuation and inflation control. According to Gammon, if the Fed engages in gold QE, it may directly address inflationary pressures in a new way.
This could potentially lead to a more stable inflation rate and improve investor confidence. Gammon highlights that adopting a gold standard might lead to long-term economic stability.
This shift could also restore market confidence, particularly during times of financial uncertainty.
What does Gammon predict for the gold market if the Fed goes ahead with gold QE?
He predicts a significant surge in gold prices as investors flock to this hedge against inflation.
In conclusion, Gammon advises investors to keep a close eye on the Federal Reserve's actions regarding gold.
This could inform decisions about reallocating assets into gold as a protective strategy against inflation.
Today, we're exploring insights from a Bloomberg strategist about the current state of the gold market.
The strategist raises concerns that gold is reaching historically high levels, suggesting that this poses risks for investors.
What are the primary concerns the Bloomberg strategist has regarding gold prices?
The strategist believes that the current valuation of gold is excessive and warns of possible corrections.
How does the strategist link gold prices to broader market dynamics?
The strategist indicates that uncertainties in the global economy can affect gold prices, advising caution to investors. The strategist recommends that investors reconsider their gold holdings in light of current conditions.
What shifts might investors contemplate in response to these warnings?
The strategist suggests diversifying into other safe haven assets as a prudent strategy.
What predictions does the strategist make about the gold market's future?
The strategist foresees a price correction in the fourth quarter as market dynamics evolve.
In conclusion, the strategist stresses the necessity of reassessing gold positions in investment portfolios.
Investors should also explore alternative investments, particularly in view of potential market volatility.
Today, we're looking into Dr. Emily Brown's insights on how a government shutdown might impact the financial markets.
Dr. Brown highlights the significance of employment data and its implications for market confidence.
Dr. Brown notes that government shutdowns introduce uncertainties which can severely impact market performance.
She emphasizes the importance of economic reports in providing insights into employment conditions amid these uncertainties.
How does Dr. Brown assess the value of employment data?
According to Dr. Brown, fluctuations in these reports can signal upcoming trends in the job market, influencing investors' sentiment.
What can we infer about investor sentiment from Dr. Brown's analysis?
Dr. Brown suggests that investor confidence often declines during shutdowns, especially if employment data is uncertain.
What predictions does Dr. Brown make regarding market performance during a shutdown?
Dr. Brown extrapolates that if a shutdown occurs alongside disappointing economic data, we might see a significant pullback in major stock indices.
Dr. Brown concludes by advising investors to closely monitor employment data to gauge market shifts.
She also recommends considering portfolio diversification as a protective strategy during these unpredictable times.
Today, we'll analyze insights from Emily Brown on the current Texas housing market as discussed with David Lin.
Emily notes the significant economic pressures affecting housing prices and market activity.
Emily identifies increased interest rates as a key factor affecting homebuyer interest.
David adds that these economic shifts are contributing to a decline in housing demand. Emily explains the consequences of rising interest rates on mortgage affordability.
This situation exerts downward pressure on home prices due to reduced buyer activity. Emily highlights that local economic conditions in Texas are influencing the housing market.
With job instability on the rise, potential buyers are hesitant. According to Emily, Texas has seen a noteworthy decline in home sales.
This may signal a shift in the housing market dynamics.
What predictions does Emily have for the Texas housing market?
She forecasts that if interest rates stabilize, home prices may continue to decline.
In summary, Emily advises potential homebuyers to stay informed and cautious.
She also mentions that investors could uncover opportunities in undervalued properties as market dynamics shift.
Today, we delve into the analyses made by Dr. Susan Harris regarding the changing job market.
Dr. Harris highlights unexpected shifts in employment dynamics that could alter economic perceptions.
Dr. Harris claims that recent data unveils remarkable increases in job creation.
Alongside this, she raises ongoing issues regarding stagnating wages despite positive job numbers. Dr. Harris points out unparalleled job creation rates depicted in the latest reports.
This uptick in job opportunities significantly alters our view of economic health.
What insights does Dr. Harris provide about wage trends amid job growth?
She emphasizes that wage growth lags behind job increases, raising significant concerns for the workforce.
What sectors does Dr. Harris identify as leading in employment growth?
Dr. Harris identifies that sectors like technology and services are driving the creation of new jobs.
What future trends does Dr. Harris foresee in the job market?
Dr. Harris forecasts that job growth may stabilize, but wage growth will continue at a sluggish pace.
To adeptly navigate the evolving job landscape, Dr. Harris encourages acquiring skills relevant to burgeoning sectors.
She urges policymakers to prioritize wage issues to prevent adverse economic effects.
Staying informed about vital economic indicators is also essential for both job seekers and businesses. Today, we're analyzing the insights of Brien Lundin regarding the potential for gold prices to reach between $4,000 and $6,000 per ounce.
Brien highlights several macroeconomic factors driving this prediction, including rising inflation and significant demand for the precious metal.
Brien Lundin suggests that gold prices are poised for a significant increase, primarily driven by rising inflation.
He argues that the current economic climate, characterized by geopolitical tensions, enhances gold's attractiveness as a safe haven investment. Brien discusses how inflation often leads investors to seek gold as a protective measure.
So, higher consumer prices mean more gold investing.
Exactly as the purchasing power erodes, gold becomes more appealing.
Brien notes that ongoing geopolitical uncertainties can significantly boost gold prices.
In times of crisis, investors look for stable assets like gold to protect their wealth.
Brien emphasizes that the demand for gold from both the jewelry market and investors is surging.
This growing demand is critical as it supports the upward price trajectory.
What does Brien Lundin predict for gold prices in the coming years?
Brien predicts that with ongoing economic and geopolitical pressures, gold could potentially rally to between $4,000 and $6,000 per ounce.
Brien concludes that investing in gold should be part of a diversified portfolio.
He recommends keeping an eye on economic indicators as they will provide insight into gold's future movement.
What an insightful roundup we've had with our financial experts.
Indeed. Brien Lundin's bold prediction about gold could mean a future where gold prices soar, but our Bloomberg strategist suggests we might be due for some market corrections.
That contrast really highlights the uncertainty we're facing. And then there's Dr. Susan Harris tackling the evolving job market challenges. It's such a crucial discussion.
Absolutely, and speaking of crucial discussions, Emily Brown's analysis on housing trends emphasizes how economic conditions dramatically shape property markets.
And let's not forget George Gammon's commentary on gold QE. It's fascinating to think about how that could impact inflation and the economy.
This divergence among our guests illustrates just how multifaceted financial challenges can be.
If you learned something new today, don't forget to like and subscribe.
Yes, your support helps us continue to provide insightful analyses from top experts.
Stay tuned for our next video, where we'll explore global trade dynamics and their far-reaching effects on markets. You definitely don't want to miss it.